You're the Zaddy of VC. I'm putting that. You are a VC Zaddy.
I don't even think the words VC and Zaddy have ever been combined before.
In this week's episode, we sat down with Amrita Saigal. She is the founder of Kudos. This is an elegant, sustainable diaper brand. Well, it started as a diaper brand and is now expanding in what it offers and expanding into stores like Target. She's joined by her investor, one of her earliest investors. His name is Charles Hudson. He is the managing partner of Precursor Ventures. He is a 25 plus year veteran in Silicon Valley and one of the most respected pre-seed investors. This was an electric conversation that covered everything from tactical takeaways between founder and investor relationships. What's a good time to raise capital when you're a consumer brand? What are some terminology that you might need to know as you're entering this space and considering building in this space? There were so many takeaways, so enjoy, take a listen, and I hope you get as much value out of it as I do. Something that for me was an overture, like it's the through line of both of you in what you've been building, continue to build, and Charles, your 25 plus and ongoing career. And that's conviction. Because, and I'll start with Charles, it's in why you do what you do, how you build your team, how you set up your team to invest, all of it. And Amrita, for you, conviction is what we know with every founder, which is, oh, wow, my grandma has a sanitary pad that is literally cloth. I recognize that story. That was my mama too. And I mean, I didn't go do what you did. There's something that happens between recognizing a pain point and that conviction to say, let me actually upend my life like you did, literally going to India to say, I'm going to do something about it. My question, and I'll start with you, Charles, and especially having, your son, Charlie, like having kids, what would you tell him is a way to build conviction?
Anyone who's met my son knows he has strong opinions on his own.
You're like, I got to tell him.
And one of the things I tell people all the time is Precursor is a single GP fund. We have 14 people who work here, so it's not just me. But I do think it's easier to get to conviction when you have to convince fewer people. And I basically only have to convince myself that something's a good idea. And I think a lot of people focus on the downsides. Oh, well, what if you make a mistake? What if somebody else helps you see something you wouldn't have seen on your own? I'm like, that's fair. But what if somebody, based on their own fear, past experiences, scar tissue, talks you out of doing something that you know you should do? And in venture, the goal is not to not lose money. The goal is to make money. And what I find is that it's funny, like so many firms, you ask them, tell me about your best investments. Oh, they were really controversial. There wasn't a lot of agreement. It was like a really pitched discussion. And I'm like, okay, well, that's good. That means there wasn't consensus. But I'm just sort of like, if you had been there on your own, the person who really believed in that company would have just done it without all the extra friction.
Right.
And so I think people focus so much on how like collaborative decision making and having a lot of other people involved. I do agree it keeps you from making mistakes. It also keeps you from doing things that are risky with high upside. And I'm in the business of finding outlier. Outlier companies are supposed to be unpopular. I would say half of the things that I invest in, I'll just give you one example. Like we were first investors in this company, CoStar, in the astrology space. And I told people that I was doing, they're like, don't you believe in science? I was like, well, yes, I believe in science. I also think astrology is interesting. These two things are not mutually exclusive. And I think it would have been hard to convince a partnership. Also, as Amrita knows, we have a very large portfolio in women's health or products where the primary consumer is a woman. And I'm the only man on our whole team. And if I was like, ooh, I can only invest in things where I'm the customer or I have a point of view, our portfolio would look really different. And so for me, I always tell my investors, my job is not to be the expert. My job is to find the expert. And if I can focus on finding the expert, I can invest in just about any category on the planet, so long as I believe the people I'm finding know the most about it and have the best perspective for building an interesting business. And so for me, conviction comes from finding somebody who literally has forgotten more about the problem they're trying to solve than I'll ever learn.
Do you think every person in their lifetime will have the ability to find conviction on something? Or is there something you can say about your childhood or just traits that make you say, wow, this is why I turned out this way?
I think it's kind of funny. I've been thinking about this a lot. I think for me, a lot of the decisions I've made are very different than the experience that my parents had. Mm-hmm. So I grew up in Michigan. My dad worked in the auto industry. My mom was an attorney. I had one relative in Northern California when I moved out here 20 some odd years ago. And I started working in an industry, technology, that my parents didn't know anything about, in a part of the country where they didn't have friends who could like look after me or give me advice. So most of the decisions I've made in my career, like I could go to them for like conceptual advice, but they didn't really know anything about the work I'm doing. And so like, I guess I sort of have to figure out the mechanical stuff on my own. And I'm a Taurus. I've never really had any problems like making decisions on my own and being stubborn and being willing to like stick with the decisions I've made. So I don't know where that came from, but I do know that moving to California put me in this place where a lot of the resources I would have had if I'd stayed in Michigan just weren't available. And I'm like, well, I have to figure this out here in a different context.
I mean, Amrita, I think it's a very similar, storyline for you, which is, well, there's the South Asian element to it, right? Which I want to start there. Like, you're from a family of engineers, you're from a family of overachievers, or sorry, I shouldn't say overachievers. Normal when you're South Asian. I was joking with my researcher saying, by like the sixth or seventh episode, I'm just going to call this the South Asian podcast that my parents shouldn't listen to, or your parents shouldn't listen to, because everyone coming on here, it's like amazing. But all jokes aside, Amrita, like going back to what we were saying, you obviously had the academic background. MIT Mech Eng. Yep. I mean, at this point, it's so incredible, just the academic achievements of South Asian women. And I mean, I could, as you know, scream home about this all day, but it's that step that you took to say, wait, I had this conversation with my grandma. So many of us are having it. Tell me about that jump. If you can remember it, or was it a moment? Was it no, now I want to go do this and try and fix this problem with Saathi before we even get into Kudos?
Yeah. So my first company before starting Kudos was Saathi Pads, making biodegradable sanitary pads out of waste banana tree fiber for women in India. And that really stemmed from a conversation with my grandmother when I was working at Procter & Gamble right out of college. I was actually working for Always Pads. And she was saying that growing up in the 1930s and 40s in southern India, that they didn't have access to sanitary pads, and it was very common for multiple reasons. It was also like you weren't, at that time, you're not supposed to go to school when you're on your period. You also don't have access to high quality sanitary protection, all of that. Yeah. And so, believe it or not, like lack of access to sanitary pads is a leading reason for higher dropout rates for school age girls compared to boys in the majority of rural India. And so that was kind of what prompted me to be like, oh my God, like, can we do something? And that's what set me on my first company, Saathi Pads, making biodegradable sanitary pads. And then that's based in India. And then I've now stepped out of that and now working on Kudos for the last 6 years, making 100% cotton lined baby diapers for the US market. So so I've kind of always been in this pee and poops.
I actually never thought of it that way until you said that.
I've always been in this consumer absorbent space.
You can call it
anything that needs an absorbing pad. I'm there. Yeah.
Do you look back at the time at Always as like a serendipitous, this is what put me on this journey?
Oh my God. 100%. I think it goes back to a little bit of my childhood. I think I just was like naturally always fascinated by consumer products. Like I used to love going, this sounds so silly, but like I used to love going to we had this local pharmacy in Burlington, Massachusetts, where I grew up. And I don't know, my mom would take me there once a week to buy whatever. And I used to just love like roaming the aisles and like looking at like what new products they had. And my mom would generally give me like $5 and say, you know what, go buy whatever you want. I'm going to like, and I remember like back then, this is like elementary school, middle school, being like, oh my God, someday, like I would love to design a product that's like on these shelves that I can like understand, like that I could go to my grandmother and she would understand and be like, oh, like you designed that, you did, like, I always was fascinated by that. And having very, South Asian parents, I remember asking my dad, like, how do I like design products? And he was like, I mean, there's obviously a million different ways to get to that end goal. But I remember he was like, you should major in engineering and then you can do whatever you want. So he was like, you can engineer and design these products. And I was like, okay, that makes sense. And so that's kind of how I ended up in engineering. And that, and my dad also said, I will throw this in as a side note. My dad did also say, he was like, my dad's a mechanical engineering professor at Tufts University, and I come from a family of all academics. And my dad did say, he was like, I'm very supportive of whatever you want to study in college. He told me and my brother this. He like definitely was not. But he was, his way, he said, if you and your brother major in engineering, me and your mother will pay for college. If you want to major in anything else, we are absolutely supportive, but you should take out a loan and pay for yourself. So that was.
I mean, it's a bit of like almost the Japanese soft way of doing this. It reminds me of like that, which is I'm blackmailing you, but I do it with such kindness that you never actually know.
No. So there was never like a question. It was like, obviously we're going to major in engineering. Like there was no question. And then I got my dream job at Procter & Gamble because I'd always loved consumer products and started working at Always Pads. And that's also when I was where I learned firsthand like how much plastic goes into diapers, and diapers are actually the third largest consumer item in landfill waste, which is what prompted the starting of Kudos. So I got my dream job working as a automation engineer, designing equipment to manufacture these products. And
look where we are.
And to be honest, my dream has come true. Like I have a product that we sell at Target. Unfortunately, a local pharmacy closed down in Burlington, but
you're on to Target, so I mean, you know, as my son does, rip to the pharmacy. Let's get into the good stuff, which is the journey that I think so a lot of South Asian female founders, you know, they do over-index in the consumer product space, and that's not good, not bad, just is. So I think hearing and seeing examples like yours of this path that you're on really kind of at the time, well, in your case, it's you were a born entrepreneur. In many other folks' cases, they don't know that this is a pain point that they're going to discover that they want to solve. But either way, just seeing this journey of you raising pre-seed and seed, having a follow-on check from a VC firm, it is still black boxed for the women who, you know, they're not listening to Acquired and 20 VC, you know, this is not their day, and they're not reading like Charles's Substacks, like that's for sure. So it might feel a little elementary or maybe not, but I'd like to just start with, so you realize you want to build Kudos. You know that there's costs involved in the technology that looks vastly different than when you're using plastic. And then you need money. So I'm really kind of making it simple for people who listen to this. What happens then? How does Precursor enter your world?
Yeah, no, that's a very good question. And I think I will say when we raised our first $3.2 million seed round, that was in 2019. And I think Charles will completely agree that the fundraising environment in 2019 is completely different than it is today. So I want to caveat whatever I'm going to say right now by saying that. So when I had raised that initial round, I did not have a product. It was very much based on an idea. And I met Charles through actually one of my other investors, Brandon and Patrick from X Fund, when they're and amazing investors as well. And they introduced me to Charles. And what at that time, this is 2019, Charles had known my background with Saathi, what I had built there, my experience at Procter & Gamble. I had also worked at Google X for a couple of years on Google Glass, for those of you that may remember that product. I had that strong manufacturing background. I had been in this consumer absorbent space. So, I mean, Charles can tell you, we should ask Charles why he believed in my vision.
Yes.
But, and we'll go there. But if I have to say, it was like, I had this vision. I was able to pull together the right team, and I knew how to build the technology. So we were able to pitch that vision and idea and go out and raise. That was 2019. Yeah. I will say now, I think just where the world is, fundraising environments, I do think it's extremely difficult to raise a seed round without traction and revenue. It was hard then too. Okay. I want to be clear. But I don't think I could have done what happened in 2019 in 2025. I think part of it is like, there are a lot of people building direct to consumer brands. And I just think, it's hard. Like, acquiring customers is hard. The CAC, the cost of customer acquisition, is only rising. There's a lot of options. So I think like now it's very important to, I think in 2019, I felt that there was much more just focus on top line revenue numbers. And now the focus is on profitable unit economics from day one, right? I think that like, it's no longer that you can raise VC money to go throw it at Meta and Google Ads, right? So I think we need to have those unit economics working from day one. And I think it's been a tough few years for a lot of consumer founders, but I think at the end, it's going to make us all stronger. And we're really, really focused. You might have slower growth, but that's not bad, right? You can have slower growth, but if you can make that unit economics and get profitable early on, I think that's
agreed. And a couple of different directions to go with this on, but I mean, I say this to angels all the time. I was like, 2019 was like an MTV hip hop video. It was this, like, that's literally in the consumer space. I use a lot of analogies to like simple things out. Charles, this is an interesting conversation, given that there's so much that you talk about about founders who don't actually have the pedigree and obviously she's going to build this. She has A, B, C, D. It's interesting because that's a whole separate conversation of what do you do when you don't have that. In Amrita's case, you did, but I still, if you can take us back to the intro and how what happened from there.
I think and Amrita knows, the funny thing is we're also investors in a adult incontinence product focused on female consumer that is also using a different material to solve this problem. So when she pitched me, I was like, oh, we now have like both ends of life covered. The beginning and the end. And I'd seen a little bit from that company about just like what it takes to stand up a manufacturing facility with a new material and like a new manufacturing process. And so I was like, this is hard, but like all of the defensibility in startups comes from actually taking hard problems and solving them. You don't build a defensible startup by solving an easy problem. So I was like, I know that there's customer demand. Also, I had a 2-year-old at the time. Yep. So we were like mid-diaper, but I could see light at the end of the tunnel. And so I was like, I know how hard it is to find a product that I feel good about. And the third thing is we had a portfolio founder who was building an e-com infrastructure company who had worked for one of the other startup diaper companies.
Yes, this is...
And without revealing anything that was inappropriate, she's like, this is a really big category. Like, and she sort of helped me understand this is what the broader customer cares about. And if you were to build something new and fun something new in this category, these are the attributes you'd want to look for. So I was like, okay, she definitely has like experience with this category. She has experience with manufacturing. And most importantly, she has a point of view about what parents care about. And like, I think it's very easy for me to fill in like, what's the brand promise going to be for this product? I'm like, oh, that's very easy for me to understand. Now, the big questions were, in a category with lots of incumbents, how are we going to stand out? And like, I think that's where Amrita's really shined, is finding some very creative, interesting channels of people to talk about the product and promote it. And they are not what I would have predicted when I invested.
I was going to add to some of the questions, and I was wondering if this came up as a question for you, because I know, Amrita, you talked about it, about the whole idea of like elegant sustainability, that sometimes when products do good, they look ugly AF, or, oh, I'm sustainable, I'm doing good things, oh, it's okay if it's kind of like 20% efficacy. Like, was that also a part of your consideration set?
Yes. Yes, absolutely. So I think and let me just explain
ugly AF is in the technical
what we
word.
mean when we
Sorry.
say this concept of elegant sustainability. And actually, it is. Actually, that is. I think the reality is in 2010, 2015, when like a lot of these like eco-friendly products were just starting to hit the market, I think there was this perception that consumers were willing to take a hit in quality and performance in order for an eco-friendly aspect, that they were like, okay, it's eco-friendly, it's just not going to be, you know what, it's going to be ugly AF there, or it's not going to perform, it's going to perform at 50%. And I think that was fine at the beginning of the moment, but now that is no longer the case. People demand, they expect sustainable materials, eco-friendly materials, reduction in plastic usage. We all want that, right? We all want that, especially when it comes to products for our children. We care 10x more, right? We want the absolute best for them. But I think it needs to be elegantly sustainable. It needs to be beautiful. It needs to be sustainable, and people are no longer willing to take a hit on quality, especially when it comes to diapers, right? That's the biggest thing. Like, what makes our Kudos diapers different is that almost every other diaper on the market, even the ones that are branded as quote unquote eco-friendly, they are lined with 100% polypropylene, polyethylene, which is plastic. Yes, these materials feel very soft, and that's just engineered plastic to feel extremely soft. And so if you're going to start using cotton, and what people really like about our diapers is that it makes it extremely absorbent for kids that have sensitive skin, diaper rash, eczema, because it's not plastic up on your baby's skin and it's cotton, and the breathability of that, it tends to really reduce diaper rash, eczema,
things that we've almost accepted as a rite of passage with newborns.
And then the softness.
Like, isn't that crazy? Like, we've just like, oh yeah, your kid has a diaper rash. Yeah. Okay, here's what you use. And without even, we just weren't presented an alternative.
Yeah, it was like,
this is
slap on Desitin, try these other things, right? So, and diaper rash affects almost every baby at some point. And so if we can really help prevent that, that's been, and using natural materials really help with that. And so that's it. It's like, can we do it, but without I did not want to create a product that had lower performance. It had to have that super high premium performance as well as sustainable materials, and that's really what
back when you were
conceptualizing
and you were thinking through this. I feel like that was still a time where people were like, "Oh, that sounds nice, but it's going to be really expensive. It's not going to be at a price point." So I would like to hear from both of you. Was the change in that, and the price point coming down, and just the adaptability or an interest from the consumer to try it, even if the price point's a little higher. B, look at something like a subscription model, which I think when you started, it wasn't as widely adopted as it is now in the B2C space. Like, was that a shift in trend that you saw coming? And I'd like to hear that from both of your points of view, because that's instrumental to the growth of the company.
Yeah, I mean, subscription's been huge for us. In general, diapers are a lower margin business. They do not have 60, 80% gross margins. They're much lower gross margins. But the reason diaper businesses can succeed is because of that repeat customer that you're getting every month for 2 to 3 years, right? So that's absolutely critical to our growth, is that subscription model. For sure. And then in terms of price point, we are definitely a premium product, and it's not because I'm making that much more profit. I'm definitely not. The reality is that these sustainable natural materials are just more expensive than the plastic alternatives, right? I think that's the reality, because these supply chains are new. They're not like, if Procter & Gamble wanted to do 100% cotton lined diaper, they wouldn't be able to do it, because they would need 1 billion pounds of this type of cotton on day one, and it just doesn't exist because these cotton suppliers haven't developed these supply chains, because there hasn't been a buyer. So it's really up to small companies like Kudos to build these sustainable,
and show that it can be done,
natural material supply chains, and as they grow, then the costs will come down, and then they'll become.
Charles, I'd like to hear your same kind of from an investor lens.
Yeah, we have a lot. We probably 10, maybe 15% of our portfolio is physical products. That's a mix of hardware and consumer. It's everything from baby formula to olive oil to diapers. And to Amrita's point, my general belief is the version of the product I'm investing in is the most expensive version of it that will ever exist. And a couple of things happen. The companies get better at manufacturing their product. They figure out how to take out costs. They get more volume and they get better prices. And then usually the underlying technology that they're using to make the product usually gets better. So I'm like, as long as there's a compelling argument that we can ride down the cost curve, we should be fine. Also, there were priors here. There were other startup companies that were selling premium diapers with materials that I felt like were less good. So I was like, we don't have to be the lowest cost diaper producer, and we probably don't have the capacity to do that at the time when I invested, but we need to be able to get the price down where we can make a reasonable margin while still charging a premium. And I felt pretty confident that the necessary priors existed for that to happen.
So this is something that because you followed on, and this was something I was listening to you talk about under the questions I wish founders would ask me more often, which is, what do I need to do? What do you look for in following on? And in Kudos, you did. So I'd love to hear from the time you invested in Amrita. And Amrita, I would like to hear this from your point of view as well, not just from a metrics, but kind of how the company grew. What was some of the thinking, or as you say, like, what are the right metrics to measure and track that took you from pre-seed to then following on?
I think when I first invested, it was going to be a predominantly D2C business. And I was like, well, someday we'll get into retail, because like you have to, in most cases, get into retail to grow. And I was like, but that's not a today problem when I first invested. And then I was like, well, if we're really going to be successful, we'll have to find a good retail partner who's got real distribution, we're parent shop. And that you start adding those conditions, and the number of firms that fit ends up being small. And I was like, all right, that's one thing. So in the back of my mind, I was like, we're going to need to unlock that. Second, I was like, I've never worked with Amrita before. I have to figure out, is she a good operator? Is she good at making decisions? And everything from like supply chain to pricing to advertising and market, like everything I would have wanted someone to do, she did. And then once she got into retail, I was like, we should definitely continue to invest in this business, because I think that unlocked a whole new level of growth for the company. And just to put it in perspective, we try very hard at Precursor to hold our reserves dollars only for the top 20% of companies. And 20%, it's not based on metrics. It's really my subjective assessment of, if I only had a little bit of money available to put into the best companies, is this company on that list? And that's a moment in time assessment. So we've had some companies that have come to me and asked for follow on, and they weren't in a place where they were in the top 20. We told them no. They went and fixed the business, came back, and suddenly they are. But this felt to me like this is a chance to build a diaper company that really stands for something and means something. And when that happens, like you need a great product, you need great distribution, you need a great brand. You need those three things to build a great CPG company. I'm like, well, we already have the early indications that we're on the right track to have all three.
Amrita, from the time that the first check came in to, I mean, this is a tough one. I mean, he's right here, so you can't say it, but I was like, did he show up, or was he a silent investor? Let's say, I mean, in no world is Charles a silent investor, but let's pretend it's not like you could say that. But what happened?
We wouldn't be doing the podcast together if I didn't have more.
Exactly.
If he was a
silent. If it was a silent.
No, I mean, from the very beginning, right? Charles has been like extremely helpful with intros to other investors, to other founders, to different partners, helping think through team expansion, when like helping think through how to structure the fundraise. And as Charles knows, we had for the follow-on round, we had a lead investor that fell through at the 11th hour, which was extremely like unexpected and traumatic, and Charles like helped me walk through that, and I don't think either one of us will ever forget that. And thinking through, I've had to like let people go, how to do that. That was like, I'd never been in that position, so Charles helped talk me through that. So there's been a lot of things that that have been like extremely helpful, and it's been a really good relationship for the last 6 years, and I'm very thankful for it.
I'm really interested in this, even though not a VC, as an angel, and introducing women to the world of angel investing. I say this often, and I think so many angels do, which is it goes beyond the check, right? And it's in that sense, it's very, very similar. And I think especially, Charles, given that you're in the early stage part of the life cycle for a founder, it's the how do you say? It's like the closest to the angel aspect of how we interact with the founder. So the founder relying on, or the founder leaning on the support of an investor, venture or angel, do you see that role having also evolved over time? Do you see that being from, and if you can answer it from an angel and venture point of view, like what do you see as the shifts, and what do you see today as a way to add value? I mean, this is especially given kind of the stuff Amrita has been talking about and how you.
I don't make as many angel investments as I used to because of the fund.
Yeah.
But I think when I'm an angel, my expectation is I'm here for you. I'm like a resource for you to figure out how to utilize. But I don't want to get in your hair because I'm not a big check. But I found as an angel, I'm much more reactive to requests from founders and less proactive. For most of the investments I make at Precursor, we are either the largest, second, or third largest. We're one of the top three investors in the company when we enter. And those, I tend to think I need to be more proactive in terms of how we engage. For a couple of reasons. One, about 2/3 of the founders we back are doing this for the first time. So I'm like, they don't actually necessarily have a framework of how to utilize their investors. So part of my job is to show up in a way that helps them figure out what we can do to help them. Second, like we're a pretty substantial capital provider, and part of my job is to be more informed and more involved on behalf of my investors. But still, I think the first principle is do no harm. I do see like a lot of investors and sometimes angels, out of a desire to be informed, up to speed on the company and helpful, they end up for a $25K check creating $100,000 worth of headaches and problems for the founders. And so I think at the end of the day, like I can't help Amrita with every problem that she has in the business. If she has some complex, she's had some supply chain manufacturing things, I'm like, I don't actually even know how to frame that problem.
Right.
I don't feel any need or obligation to weigh in on the areas where I have no expertise. There's a pretty narrow set of areas like fundraising, team dynamics, where I feel like we have a point of view as a firm and where I have enough experience where I can provide input if I'm invited to do so. And so I tell my team all the time, as an investor, you have to earn the right to share your opinion with the founder. And it's not a function of your check size, it's a function of trust in the relationship you have with the person. And so I think if you can build trust, and I always tell people like every interaction we have with the founder, you're probably either adding or subtracting from the trust bank. And so it sure does help to like have most of those contributions in those interactions be additive, because sometimes you will have to say something difficult to somebody. You will have to have a tough conversation, and that's much easier if there's like a history of trust.
One thing I just want to add that I think Charles has done very, very well. I'm very fortunate that I've had like a very great set of investors, but I do want to call this out that we obviously have a bunch of people on our cap table, over 20 people, ranging from all sizes of checks. But Charles, in the early, I know all of my investors were like, hey, if you ever need something, like reach out. But you like as a founder, you're always like, oh, like, is this like important enough to reach out? Like, do I want to bother this person with their time? They're a partner at this very important fund. And this seems so small. But in those first couple of years, Charles, we had a standing 30-minute meeting once a month. I know this sounds like so like
it's always
small.
The small stuff.
And so it was, I think that's part of the reason why our relationship developed so much. And Charles always said, hey, if you don't need the meeting, just cancel it, but keep that 30 minutes on the calendar. So then it gave me, like, every time before we met, those couple days beforehand, I'd be like, oh, here are things that are on my mind, and it would be great to have a thought partner, versus other investors that are like, hey, reach out whenever you want. I wouldn't have gone out of my way to be like, hey, can we set up some time to chat about this, because I didn't think it was that important. But then some of those conversations ended up being like very pivotal. So if you like, for angel investors, like I think Charles is very right in saying, like, I also have a few small angel checks where they become it's like not worth that check
Yeah.
because they constantly want updates. They
Yeah.
constantly want to know, how are you doing this? And you're like,
Yeah.
just give me some time and I'm going to figure it out. But having this relationship worked very, very well, for me, and I think built that trust. And so like when we were going through fundraising, because Charles had been up to date, like other than yes, do I send like a monthly investor email? Yes, but that's different than having that quick 30-minute call. And I mean, kudos to Charles he has hundreds of portfolio companies, and I don't know how he's superhuman and is able to actually talk to everyone. So how you do that, Charles, I will never understand.
A team of five, apparently, just to manage his life.
Yeah, but I think that was like very critical, just having that standing meeting.
And we try really hard to convince people of what Amrita said, and some people are just like, I don't know, like what are we going to talk about? And like, I actually don't know what we're going to talk about till we get on the phone. But I think that for me, at least, they're really helpful. And
It's a
when it comes to
signaling
follow-ons,
of I'm here if you need help. It's so simple but so useful. And I think there might be people who are like, no, I actually don't want to do that. But so I mean, I hate to say it, but there are.
And that's fair.
Right?
I mean, you have to decide if it's the right investor and that's the right relationship.
Right.
In this case, it worked very well. Yes.
In the day and age of content creation, and Charles, I mean, you appreciate this. Amrita, you're on Instagram. You appreciate this. Like in the day and age of the romanticization of angel investing, and everyone should just start a company and immediately seek venture. Like I'm actually adding to that because of like the wonderful relationship that you guys have. So tell me, both of you, please. I'll start with Amrita actually, especially in this environment. Why should or shouldn't a consumer product seek venture funding?
I think my advice is if you don't need to, don't. And I think the biggest thing is, I mean, one, you lose ownership, right? You're giving up equity that's yours. I think if you can build a sustainable, profitable business from day one, I think that's like the holy grail. I think that is like my advice. It's not possible, right? Like we couldn't have, because manufacturing the R&D,
Capital
like we
intensive.
absolutely need it.
Yeah.
There was no way to do it. So we did, but I'm always mindful of making sure we're only raising as much as we need. And I think, like I said this earlier, like fundraising is difficult. Fundraising is very, very challenging. You will have tens of hundreds of conversations and 99% of them will say no. But every pitch you get better, you learn how to refine your story. You learn you get a better sense of what investors are looking for. You're able to change your vision a little bit based on feedback. And so I think if you need it, take it, but don't. I would say the goal shouldn't be like, I need to build a venture-backed company if you don't need to.
Charles? This is such important advice from a founder to hear, by the way, Amrita, because there is a romanticization around that right now. Like, I raised this much is like but wait, do you understand what's the thing that comes after? Charles, you should talk on this. I mean, really.
I think what Amrita said is spot on.
Yeah.
And what I tell people is, whoever's money you take, you're signing up for their business model. So, there are exits as an angel investor that would make me thrilled. That as precursor, I would be happy, but like they wouldn't be as impactful to the fund. Mm-hmm. And I think for some of these really large funds, what people need to understand is the scale of companies that are interesting to them are measured in the tens of billions of dollars of outcome. And so I think if you really think you're building something, to Amrita's point, that requires that capital, but also can grow into the scale of a company that fits those funds' business model, it's probably a good fit. There aren't that many CPG companies I meet that really are going to become multi-tens of billion-dollar scale public outcomes. But fortunately, there are other ways to finance these businesses. There's debt. There's private. There are other ways to finance it than just venture as you start to scale. But I think a lot of these businesses benefit from a little bit of venture capital at the beginning, just because there usually are hard costs to getting started.
And I think that's something where like Brown Girl Angels like fits in well, right? Because you can give that very early capital in smaller amounts, and I think that so it's like very critical. So yes, Charles is right. Like even if you don't raise venture funding, you likely need some money. And I think that's why it's like very important to have access to these kind of angel groups or friends and family that can really move the needle for the business.
Charles, we could have had a whole other conversation, which is really my soft way of saying you haven't heard the end of me. And Amrita, where you're a Brown Girl founder, you already know where I sit with that. But it's, the conviction you have around investing in having a team of female investors and investing in not the what I'll call the regular rigmarole, right? And really, whether it's from a race, gender, a geography, that's really been the storyline. I can almost guarantee no one said this to you before, and that's a very bold statement for me to say. So here we go. I'm going to start with reading something that it was on Mercury.com. It said the homepage for Precursor greets you with the warmth of a proud parent's refrigerator door. A simple gallery of smiling founder headshots. Every row has at least one person of color, and almost every other face belongs to a woman. And this is the part that I don't think's been said to you. Do you know what that essentially means in today's speak, in pop culture speak? I don't know. Do you know who Pedro Pascal is, the actor?
Yeah.
Okay, so you're the zaddy of VC. I'm putting that. You are a VC zaddy.
Oh my God, definitely. I don't even think the words VC and zaddy have ever been combined before, ever either. So you're breaking all kinds of new ground on this podcast.
Oh
my gosh,
love it.
That's I'm like Pedro Pascal, who like this guy's a VC zaddy. He is like, I mean, Amrita, you know the word, right? You know zaddy? You know zaddy energy? Okay, good.
Yep.
Yep. Like, does he know this? And please let Brandy know that this was heard first on this podcast.
Oh my God.
All laughs and jokes aside, the conviction early is what allows the Brown Girl Angels. It's what allows the success stories and the ongoing success stories like Amrita and Kudos, and not taking away, of course, the way I say this, I want not taking away from your caliber and you being, to me, destined to build this. But from the venture side of things, from the funding side of things, it's the early folks that make all the difference. So we do a section called like just terms demystified. Startup bites is what we call it. And I'm just going to give each of you a term that you're going to simple English break it down. So can we start with Amrita? Amrita, LTV. What does LTV mean?
Lifetime value. So how much revenue over the life of that customer are you bringing into the business, or is that customer bringing into the business?
Why is that important
for us? If you
could answer why is it important as well.
Yeah, so that also tells, right, like, because that's the signal of like your profitability. So for me, right, like in the ideal world, I get someone right when the baby is born and they're in diapers for 3 years, and they are paying $84 a month for 3 years. So I'm getting 84 times 36 months. That is my LTV, the lifetime value of the customer, right? And how much revenue you're bringing in, because it costs money to acquire these customers, right? Like that, it's called CAC, the cost of customer acquisition. So if my lifetime value is only $5, I can't spend $100 on Facebook ads trying to acquire that customer, because then I'm just not profitable, right? So your LTV needs to be significantly higher than your CAC. And they generally say, I'm not sure what Charles is saying these days, but like in CPG, consumer products goods, you want that LTV to CAC, the lifetime value divided by the CAC, the cost of customer acquisition, to be ideally more than a 3-to-1 ratio.
Yeah.
Amazing. Thank you. Charles, you were talking on a podcast about multi-stage funds and signaling. And I would love for you to break down what that is from a founder lens about signaling.
Yeah. So the way to think about signaling is, well, let's take a hypothetical situation. Let's say you're a company and you have the choice to raise money, and you decide to raise money from some very famous high-profile VC fund, and they put in $100,000 into your $1 million round, and they're on your cap table, and you build a business and you go to raise your next round. People look at the cap table and they say, oh, that really famous VC fund, are they following on? And how much are they going to do? Are they going to do their pro rata? And pro rata is just the amount of money you need to invest to maintain your ownership position. And so what happens sometimes is that big famous VC fund puts in a small check doesn't have the time to spend with you, doesn't really know what's happening with your company, and decides not to follow on. And when you go tell people, oh, this big famous VC fund that's in all of these great companies has decided not to follow on my company, it sends a signal to some new investors, oh, this must not be a good company. Because the people who put money in before aren't planning to follow on. And the challenge is sometimes people aren't following on in this environment because the person who made that original investment has left the firm.
Simple as that.
And there's nobody there who's close to you. Sometimes it's just that they weren't paying attention and they didn't actually realize how well you're going, the business is doing. And in some cases, it's because you're a business but not a great business. But it can be hard as a founder to overcome that. That signal becomes a stigma.
Right.
Like, oh, this great venture firm that's already in the company is deciding not to follow on. Maybe that's all I need to know about whether this is attractive or not.
Thank you. Amrita, it's such a joy, and Charles, like such a joy. I mean, this was tempered. I could have spent another 2 hours talking to you guys. I have so much, but that's again a soft way to say you haven't heard the end of me. Thank you. Thank you for making the time to do this.
Thanks for having us.
No, thank you for having us.
Now, I hope you enjoyed that episode as much as I did. I could have talked to them for another 2 hours, and who knows, maybe that's in a future episode if you guys think we should have them back. To learn more about angel investing and to get involved in mobilizing your capital and funding South Asian female founders building scalable companies, enter our world. You can find us at browngirlangels.com. Now, you can also interact with us on major social platforms: Instagram, TikTok, YouTube, LinkedIn. And of course, grab your chai, open your inbox, because there's our newsletter, Brown Girls Money Moves. Do also attend one of our Brown Girl Angels events in your city. We host a monthly dinner series called Brown Girls Desi Dinners, so make sure to sign up for that. Thanks for listening to Brown Girls Bold Moves. I'm your host, Bhargavi Varma. This podcast is produced by Edit Audio and associate produced by Cam Graywall. Don't forget to hit follow so you never miss an episode.